Late 2021, stocks were near their record highs, bond yields were quietly climbing, but consumer confidence, consumer sentiment, was at recession-era lows. Most commentary saw three unrelated stories, but it's all one web. In this case, with 3 points of tension. This is how I read it. MoneySpider, Watching the Financial Web, Episode 0, How I Read the World, Signals over Narratives. Why MoneySpider exists. We live with information overload, breaking news and confident predictions, endless certainty, often from people who are diametrically opposed. Beneath the noise, systems are interacting continuously. Debt is changing interest rates are feeding into liquidity is shaping markets. In turn, markets shape politics shapes the public mood, and public mood then loops back into policy. MoneySpider exists to observe these interactions structurally, not emotionally. A spider does not chase every movement. It sits at the center of the web. It senses vibration. It looks to distinguish noise from signal. Tiny changes in tension often matter long before the wider world notices them. That is the idea behind MoneySpider. Not prediction, observation. Watching the web change. Watching what the world is quietly telling us. MoneySpider analyzes the world through 5 primary lenses. Macro, the economy. Micro, the stocks. Demos, the people, how they are feeling and voting. Polis, the state. Flows, capital moving. Each of these lenses captures part of reality. Signals emerge from their interaction, where they align, where they diverge, and where tension begins to build. Macro examines the big picture, the broad economic environment, inflation, rates, debt, fiscal policy, central bank behavior, and the liquidity conditions underneath them. Liquidity often drives markets more than headlines, especially over longer periods. On its own, macro can miss. It cannot tell you how a society will tolerate the policies it implies. Micro, the stocks. Micro focuses on the business within markets, not just share prices, but incentives, capital allocation, debt structures, competitive positioning, and industry dynamics. Markets are the amalgamation of thousands of corporate stories. Understanding businesses still matters. But what macro on its own can miss is that a great business in a deteriorating macro regime is still exposed. Demos refers to people, democracy, demographics, sentiment, public mood, living standards, consumer behavior, and trust in institutions. Financial systems do not operate separately from society. Over time, social pressure reaches markets and politics alike. On its own, Demos can miss that sentiment can stay irrational longer than any single forecast horizon. Polis examines politics and power, regulation, elections, geopolitics, and institutional incentives. Policymakers have huge influence, especially in periods of high debt, strategic competition, and financial and commodity stress. But on its own, Polis can miss that it is constrained by what the bond market and the public will accept or tolerate. Flows tracks capital in motion, ETF flows, treasury issuance, buybacks, passive investing, credit creation, and how liquidity actually transmits through the system. Most financial commentary focuses solely on prices. Flows focuses on the plumbing underneath them. Who is buying, who is forced to sell, where liquidity is accumulating, and where it is draining. On its own, flows can miss that a flow regime can reverse the moment its underlying conditions do. Positioning data is a snapshot, not a forecast. The tension map. This is why the framework exists. Late 2021, equities were climbing, 10-year yields were rising. At the same time, consumer confidence was collapsing. Deficits were expanding. AI capital expenditure was accelerating. 5 lines on one x-axis, drifting apart. When the lenses diverge, when what markets are doing and what people are experiencing and what governments are spending all point in different directions, that tension is the signal. Not a prediction, a structural observation. Something in the web has changed. Before we go further, a word on how MoneySpider approaches this. We look to avoid certainty because nobody reliably knows what markets will do next. Confidence is cheap. We look to avoid tribalism. The data does not care about your politics. We look to avoid hysteria. Panic and euphoria are both noise. We look to focus on incentives. Understand why actors behave as they do, whether they be governments, central banks, corporations, households. We focus on evidence. What do the signals show us? This is the operating discipline. Every episode tries to hold to it. What to expect? Every Monday, MoneySpider publishes a new episode. Macro signals, cross-market analysis, charts and data, historical perspective, second-order effects, and, above all, calm interpretation when the noise gets loud. When the web tightens, when multiple lenses diverge at once, expect deeper briefs. Those are the moments that matter most. If you want to understand how the system moves, not just what it did yesterday, this is the channel for you. MoneySpider, watching the financial web, because systems matter and systems leave signals.